For about 2 years, the entire stock market has run on one idea. Artificial intelligence is going to make everyone unimaginably rich forever. And if you don't buy the chip companies, you're going to die poor and stupid. But over the last few weeks, the people whose actual job is to be smart about money have been starting to say very uncomfortable things. Bubble. There's a bomb strapped to my chest! Quick recap, because this is why it's genuinely funny. The AI trade started coming apart after a major chip company put out a weak guidance. And the jobs report came in too strong, which killed any hope of the Fed cutting interest rates this year. So to be clear, the economy is being good was bad for stocks. Welcome to the market, where nothing means what the words mean and we all have our life savings in it anyway. Which brings us to the guy this video is really about, Michael Burry. We all know him, we all love him. He shorted the housing market in 2008, made an absolute fortune, and got played by Christian Bale in the movie. He's spent every year since then predicting roughly 9 of the 2 last crashes. And in early May, Burry told his, and I promise you I'm not inflating this, 200,000 plus Substack subscribers, and the market had, quote, jumped the shark. He also reportedly put on a big leverage short against semiconductors, using put options that run all the way out to January 2027. So Burry is betting real money, long time horizon, that this whole AI thing falls apart. Now, the catch with Burry is that he's famously early, which in finance is just the polite word for wrong for a while. But when the housing crash guy starts shorting your favorite trade, you tend to freak out a little bit. And actually, here's the part that got my main attention. It's not just Burry. The professional pessimist, Michael Hartnett, chief investment strategist of Bank of America, told clients straight up to prepare for a bubble to burst. Dalio, who runs the biggest hedge fund on the planet, said basically every major technology shift creates a bubble that is destined to pop. Stanley Druckenmiller and David Einhorn, 2 more people with more money than your entire bloodline, raised the exact same alarm. And Man Group, the largest publicly traded hedge fund in the world, put out a paper arguing in plain terms that the financial structure built around AI is expanding way faster than any realistic adoption of the actual technology. To put it simply, the spending is real, the hype is real, but the math ain't mathin', bro. And of course, because we live in the dumbest possible timeline, people are not just worried about the crash, they're literally gambling on it. Over on Polymarket, there is a legitimate market where you can put your money on whether AI will burst. So you can now lose money betting on whether you're about to lose money. Unfortunately, there is a flip side to this. And in fairness, there is a slight chance that this is not a bubble. I mean, the bull argument is really simple. These companies driving actually make money. Real profits, not just the vibes. And spending on an AI infrastructure is enormous and still growing. If that spending turns into actual earnings, then these prices aren't actually that insane. They're just really expensive. And the bear case, which is what I'm mainly arguing for here, is the boring stuff that ends in the bull market. Valuations got stretched, interest rates are staying higher for longer, and a big chunk of the AI money looks like it's the same handful of companies funding each other in a circle. A little jerky circle. I mean, you are open to take your own pick on which case to take, the bear or the bullish cake, but genuinely smart people are loudly disagreeing with each other, which historically means no one actually fucking knows what's going on. So, what should you take from all of this? Here is my extremely qualified take. I legitimately have no clue. But here's what I can tell you. When the housing crash guy and the biggest hedge fund on earth and the Bank of America strategists all reach for the word bubble in the same week, while regular people are gambling on the timing of the crash on a betting site, that is not nothing. It might pop tomorrow, it might never pop, but Burry's been early before. He could be early again. But the smart money is quietly drifting towards the exits, and I'm standing in the middle of the room going, surely it's fine. But to be honest, probably none of this is fine. Anyways, literally none of this was financial advice, just looking observationally and opinionated on the market. Anyways, do with this information what you will. Don't make a stupid decision. Bye.
But I know that you're not coming back, so once in a while.